Hey guys, welcome into another weekly portfolio update. So pretty red week this week. Crypto especially has been insane. Starting off with, just say the stocks. So down $1,909 this week on the stock portfolio, which is down to $32,768, which from my initial investment of 61,000 means I'm down $28,232 or 46.3%, which is massive. The value of the house is 645,000 this week, and the net worth has come down to 314,000 this week. Crypto was crazy this week, like just outright insane. Like, we've seen some big drops before, but the fact that this big drop was on top of other big drops just made it like that much more insane. So I actually got an email that said it was like titled margin call from Binance, and they just wanted me to deposit more money in order to not liquidate my assets. I chucked in another 500 to reduce the margin in there. Honestly, I'm just I didn't want to put the money in because there's like 10% that's lost in fees. It's really bad. Maybe not 10%, but like 5% or something. It's not a visible fee when you deposit money to Binance. It's the exchange rate. They take a $10 fee for one, but they also have like hidden, like they'll say the exchange rate, and then the value will change and whatnot, and you check it. I always check it at the same time. Like, if I were to exchange New Zealand dollars for USD, how many USD would I get? And then I see the exact same amount of how much USDT I actually get, and it doesn't line up. There's about 5 to 10% or something. I think it's 5%, because 10% would be outrageous. But like for $500 deposited, that's $25 that just disappears. They tell you that they're taking $10. They do not tell you what's happening with the other $15. So yeah, I don't like that, but because of the situation, I was required to do that, so I did that. If you adjust for that $500, then the portfolio would actually be $1,131 today, which means it would be down $947, which is 45.6% literally this week, which is outrageous. So yeah, crypto has been getting destroyed. That said, so are stocks. Stocks are getting destroyed still. Pretty much everything I own is down over 50%, with the exception of Corsair, but pretty close. These are the positions as shown in my Hatch account and Sharesies account. They're just the same positions that I show in the Yahoo Finance portfolio. So the S&P 500 this week was down 4.25%. The Nasdaq was down just 1.72%, but believe me, it didn't feel like it, because some days it was down like massive. There was like 5% days and whatnot. There was a day it was down like 5%. The Russell down 6% this week. So we've like flipped back to the Russell getting hammered more. So the small cap stocks getting hammered more than the large cap stocks. And the Nasdaq, which kind of entered the mix later on, like the Russell was the first one to get hit. Not if you go on the max, but 19 November 21 was when the Russell, was that the Russell? No, that's the Nasdaq. Was when the Nasdaq started getting hit. Whereas for the Russell, 5th of November, but it had been flatlining basically since February, and the more speculative stocks in there had been declining since February, March. Like some of the stocks that had higher PEs and were more speculative they weren't earning any money. They were getting hammered from February 21, and then the Nasdaq followed later, and now the Nasdaq's actually tipping up faster, just this week, that is. But yeah, it did get hammered. It's down year to date 32%. S&P 500 year to date 24%, almost 23.4%, and 26.7% on the Russell. But as we know, the Russell was flatlining for ages. Yeah, that's pretty hectic. And the 5-year on the Russell is only 17.74%. If we relate this back to this graph, which shows the forward PEs of the S&P 500, 400, and 600. So the red line is large cap stocks, blue line is mid caps, and green line is small caps. We are trading insanely cheap for the small and mid caps. If I can zoom out on this graph, you can see the only times that we traded this low are the COVID pandemic dip. In fact, looking at that, we might even be lower. You can see the green line actually stops here. Wow, that's really hard to see. If I zoom in on this a bit more. Oh, no, it doesn't. It comes down a bit further. Okay, so we're almost in line. Almost in line with where the lowest of the S&P 600. The mid-cap stocks are a bit lower. But yeah, we're trading historically low. This does not happen often. You can see, looking back in time, we've had the COVID pandemic. We've had about around 2011, some large cap stocks were actually trading below this value. And then back in 2008, the GFC, there were a lot of stocks trading around this value. In fact, that's the only time period that's been significantly below where we are now. So we are trading historically low, and there's probably heaps of good deals to be had in the market at the moment. The argument could be made that these are forward PEs, the estimated, and where some people were predicting a earnings recession, which would mean that actually these numbers are not what we think they are, the forward PEs. They're actually higher than we think they are, because the earnings are lower, or the future earnings will be lower. So there is that argument, but historically, just looking at this graph, the forward PEs, because this is forward PEs from all time, so it's a comparable metric, really. But yes, it can have a little bit of inaccuracy due to the estimations of earnings. For example, we just went through a really high earnings period, the past year, more specifically when the Fed was pumping out money into the economy. It was a lot of companies doing really well because of that, and the low interest rates. So yeah, going from a historically high earnings period to a low one can sway the graphs a bit, but yeah, still historically low. So I believe we're definitely in a good buy period right now. I've been saying this since since quite a while back, so you don't listen to what I say, it's probably going to go lower. Yeah, looking at how my stocks performed this week, 4.3% down for Corsair, 3.5% up for Tattooed Chef, Palantir 3.8% up, Honest 3.6% down, Small Direct Club 15.5% down. It's more of a speculative one. I actually found out that they failed to operate within New Zealand. Apparently this was ages ago. They set up shop in New Zealand, were operating within New Zealand, and then ceased operations in New Zealand, and left a lot of people unhappy about the service that they paid for and then did not really receive properly. So yeah, that's probably a negative for Smile Direct Club. But I mean, they're trading really, really cheap. Like if you look at the some of the metrics, what have we got? Well, we don't really have a lot of metrics because PE requires earnings, but price to sales 0.72. That's pretty crazy. And price to book is 0.87. Yeah, that's pretty damn low. But yeah, I mean, arguments can be made for why that is. Personally, I do think that this is still a good buy price, even though it's more speculative and holds greater risk because yeah, they don't really make money yet. Fiverr down almost 7% this week. Planet 13 down 7.8%. This one I would love to buy some more shares of, due to what I think the future is going to be for this industry, considering legalization has already started. I believe federal legalization is just a matter of time. Like, this is the environment that we're moving into that's more inclusive of things like this. So yeah, I mean, I don't want to say it out loud, but it says it right there. That's what they do. Yeah, I believe federal legalization will happen for this product, in which point companies that legally distribute the product will probably be a lot better off than they were previously, because they'll have a large influx of customers, along with potentially people that went from illegally purchasing the product to then legally purchasing it. And then hopefully they can expand to other states as well, because federal legalization. Yeah, that's all I got on stocks really at the moment. Crypto, yes, as I was saying, crypto is getting destroyed. I believe Ethereum was just down at like $900 before. They got absolutely decimated. I'm pretty sure I saw it down a bit lower, but this graph might not quite show it. How about we full screen it? See if it shows. Can we go down to 1 minute interval graph? Let's see what we've got. 987. See, I thought it went lower than that, but I'm probably wrong because this is a 1 minute interval graph. Yeah, but either way, we've sunk under 1k for Ethereum. And yeah, my mining rigs are not looking so good right now. They are not making very much money at all. Bitcoin down almost to 19k. I think it did it spike below 19k? Yeah. There was one little drop there. There was quite a large amount of volume, and it dropped just under 19k, and then recovered to 19k. I'm guessing that 19k will be the new support, and it'll probably hover around there for a while, where previously about 20,000 was, or 20,400 or so. Yeah, I think 19,000 is going to be the next support level. So yeah, who knows how long that's going to last. Could very easily drop down more, because this is, the whole of crypto has just been getting absolutely destroyed recently. My mining rigs are making like $1 for maybe, like, in New Zealand dollars, like 2 to 3 New Zealand dollars per day, and I've got like 3 rigs. So yeah, like $6 to $9, maybe like $7.50 per day, which at previous points in time they've been making a lot more than that. But yeah, that it's just the way it is. The yield should actually be going up, so getting more coins because less people are mining, and in which point I do believe crypto will be coming back in the future. There's always these risk off periods and there's always risk on periods. So the next bull market, I reckon crypto will be dragged up with all other asset classes as they do. It's just going to take probably a long time. The longer this drags downwards, the longer I believe it's going to take to get back up to where we were. Yeah, I do believe that crypto will surpass all-time highs once again, but yep, as I said, the longer it's down for, well, especially the longer it like keeps going down. If it like stops like rebottoming, then we can kind of cut the time frame there and say put a time frame, some sort of like approximate time frame on the end of this. But while it's still going down, who knows? Like my estimations from this point could be anywhere from 6 months to 5 years to recover, for crypto to recover from this. Yeah, could be anywhere within that time frame, or even beyond potentially. I very much doubt it would be less than 6 months. I would consider it unlikely to be within the next year, like the next 12 months from now. But I mean, could happen. But yeah, also could be more than 5 years. So long time, I think, for crypto to recover. Stocks shouldn't take as long. And property hasn't even started. Well, it's currently starting, but yeah, I do believe property is going to see a reasonable drop. Nothing obviously like stocks have done, because property like literally can't even drop that fast. But yeah, who knows? If we do see like a significant drop in property prices, we could even see more pain in stocks because of that. Or it could just be forward looking and people will be like expecting a negative in the property market, so they price it into the stock market, and then when it actually happens, it doesn't eventuate within the stock market. Who knows? That happens a lot. You expect something to happen, so it doesn't. What happens a lot in the stock market. But then other times, you expect it to happen so much that it doesn't. Where you expect the thing that you're expecting it to cause doesn't happen because it's so expected, which is just so counterintuitive. Sometimes it feels that way within the stocks and crypto. It's very counterintuitive, but yeah. Anyway, that's pretty much all I got for this week. So yeah, leave a like, comment, and subscribe to support the channel, and have a great day. See ya.